Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, stock of the day. I thought we'd take a look at Credit Corp. One of the first to actually deliver results in this earnings season. Underlying profit fell by 11% to $81 million. As reasons for this, the company pointed to degraded US conditions and a continued runoff in its ANZ debt buying business. Credit Corp now sees its FY25 net profit in the range of $90 to $100 million. Financial stocks have done really well in the last 12 months, except this one. Despite the pullback in profits, markets seem to like it, up 7.5% so far this morning. Rudy, Credit Corp has been a disappointment, hasn't it?
Yes, it has.
Compared with the banks and a slowing economy, you'd think they'd be able to pay less for the debt books or the loan books that they buy. What's happened?
They're basically ex-growth locally. And a lot of people haven't caught up on this one, but they've actually become more and more a lender themselves in consumer credit. And that part has become ever more important locally. Yes, I think we have to realize we are moving into reporting season. This is sort of the unofficial start of the season this year. And I think the share price response is very telling. It's not so much about what companies come out with as a result. It's also what happened before that and what are the expectations. I think we can conclude that because the share price had weakened quite a lot, that it wasn't as bad as feared. And that's why the market is up. That's why the share price is up. It's becoming... Because locally it's not going well, it's becoming increasingly an American story. And of course, that goes beyond just simply buying debt ledgers over there. It's also about competition, all of that. I'm not an expert in debt ledgers, but I would assume, given the share price response today, that the share price probably has further to go because on most analysts' estimates, this is far from fair value.
Right.
On that basis, it probably has further to go.
Okay, further up.
Yeah.
So you have it as a buy.
You could probably do, but I must say it is more a case of earnings haven't been as bad as feared. I mean, it's not like they're on.
So put you down for a hold if you're in it.
Here, yes.
Right. So you wouldn't put new money into it, but if you're in it, hold it.
Yes.
Okay. Francesco?
Yeah, look, I think Rudy's right. The result, whilst it wasn't good, it wasn't as bad as the market has expected. I think, looking at the business itself, I think it's experiencing a fair bit of competition in that space as well, particularly the purchasing of bad debts and things like that. I think some organisations see that as a bit of an opportunity in this environment as well. Looking at our recommendations, we're on a hold on this as well. But, again, even if I owned it, I mean, to me, this is an opportunity to say, let's move on.
So you'd sell into the rally?
Even though we have a hold on it, if you're a long-term investor and you've been holding it for a while, that's fine. But I think there's better opportunities out there in the marketplace that if you see an opportunity like this, sometimes it's move on and let's go and have a look for something else.
So in that sector, would you rotate to anything else? But
look, if I'm looking,
Credit Clear in there as well, which is
and there's also MoneyMe and basically they're all
and looking at bad doubtful debts when they trade in a lot of this sort of bad debts and try and recover them. Those sort of things, even for these guys, increase more when people are experiencing bad debts. So I think there's risk there, not just from the competition, but also the broader market as well. Look, I look at the market at the moment. Our guys are saying, move out of banks and that would mean financials in this respect as well, and resources, and look at other parts of the market. Look for things, like the industrials and healthcare starting to look a little bit more attractive. But at the moment, we think that particularly in the financial sector, that things are probably a little bit overvalued.
Yep. Everyone has been saying sell the banks for 9 months. Someone's buying them.
Yeah. Well, I've never
every
seen
analyst has said sell the banks, and they keep going up.
every recommendation in the market on CBA is on hold or negative. I haven't seen that ever in my time. And I've never seen odds.
Is there one hold on CBA?
Oh, there's one or two, yes, yes. And the damn thing went up to a record again yesterday. So, where do you go? But look, we look at things from a fundamental basis. And if you look at that bank and you look at what it's done in the past, it's trading at a significantly higher multiple than it should.
Yeah.
And all it needs is a trigger, and it might come back to where it should be trading, if you like.
Right.
The big discussion is whether analysts have been too cautious now. And I suspect the reason why the banks keep performing is the international picture. Yeah? Yeah. Internationally, banks are on a roll. Yeah. And that's all about central banks cutting interest rates. Yeah?
But even when you look at the banks internationally, CBA is very expensive.
Oh,
even on that basis.
Yeah. But if you're buying the index...
Of course. But
you've got to keep buying.
But what caught me by surprise is that CBA is now larger than BHP. And if you go back a year ago, the distance between the two was quite a lot.
Yeah.
So that's extraordinary. One of course, they both go in different directions, and it makes up quite quickly.
Yep, absolutely. All right, Credit Corp, that's our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.